Hello and welcome back to the channel. I'm Algabot, and in every video I break down an automated trading strategy or expert advisor built for MetaTrader 5. Today we're exploring one called Piercing Cloud Reversal. This is a two-candle reversal approach that studies pure price action, combining the classic piercing line and dark cloud cover candlestick patterns with a liquidity sweep of recent support and resistance. It also uses the average true range indicator to size its protective stop. By the end, you'll understand exactly how it reads the chart, how it manages risk, and how the code behind it works. Let's get started. So what exactly does Piercing Cloud Reversal do? At its heart, this is a price action strategy. It doesn't rely on a stack of lagging indicators. Instead, it watches the raw shape of the candles and how they interact with recent support and resistance. The only technical indicator it uses is the average true range, or ATR, and that's purely to measure how volatile the market is so it can size its stop sensibly. The strategy looks for a very specific two-candle story. First, a strong drive candle pushes hard in one direction. Then the very next candle pushes even further, poking beyond a recent swing high or low, what many traders call a liquidity sweep or a stop run. But instead of continuing, that candle snaps back and closes through the midpoint of the previous candle's body. This partial recovery is the classic piercing line pattern when it happens at support, and the dark cloud cover pattern when it happens at resistance. Notice the word partial. This approach deliberately wants the reversal candle to reclaim more than half of the drive candle, but not all of it. A full engulfing candle is actually filtered out. That partial reclaim is the defining trait of the piercing and dark cloud family. And it's what separates this from a simple engulfing strategy. It's designed to work on any symbol and any time frame in MetaTrader 5, though traders often study patterns like these on the major foreign exchange pairs such as EURist. In terms of who it suits, it's aimed at people who enjoy understanding candlestick structure and mean reversion ideas, and who want to see those ideas expressed cleanly in code. Remember, this is educational information only and not financial advice. Let's walk through the precise logic the EA follows, step by step. The strategy only acts once per completed candle, so it makes a calm, deliberate decision at each bar close rather than reacting to every tick. First, it gathers its raw materials. It calculates the average true range over the chosen period, which by default is 14 bars. It then scans a look-back window of recent candles, 12 by default, to find the most recent support, the lowest low, and the most recent resistance, the highest high, in the bars just before the signal candle. Now it inspects the last two completed candles. It labels the older one the drive candle and the newer one the signal candle. For the drive candle to count, its body must be large enough, at least the minimum body size, which defaults to 1/2 of the ATR. This filters out weak, indecisive candles. For a long setup, the strategy looks for four things together. The drive candle must be bearish. The signal candle's low must dip below the recent support level. That's the liquidity sweep. The signal candle must then close back above the midpoint of the drive candle's body, but still below the drive candle's open, making it a partial reclaim rather than a full engulf. And the signal candle itself must close bullish. When all of these line up, the EA places a buy order at the market on the next bar's open. The short setup is the mirror image. The drive candle is bullish. The signal candle pokes above recent resistance, then closes back below the drive candle's midpoint, but above its open, and closes bearish. That's the dark cloud cover, and the EA places a sell order. Risk is defined the same way on both sides. The stop loss sits beyond the signal candle's extreme, padded by the ATR stop multiplier, which defaults to 1/2 of the ATR. The distance from entry to that stop becomes the risk unit. The take profit is placed at the reward to risk multiple, 1.6 by default, meaning the target is 1.6 times the size of the risk. And to keep things disciplined, only one position is held per symbol at a time. Let's read the actual MetaQuotes language code that runs inside MetaTrader 5. At the top, we have the input parameters. Lot sets the trade size. ATR period controls the average true range calculation. ATR stop multiple is the multiplier that pads the stop. RewardRisk sets the reward-to-risk ratio for the target. LevelLookback is how many bars back the strategy scans for support and resistance. and MinBodyAtr is the minimum drive candle body size relative to ATR. Now look at the first block, the bullish piercing line. The code builds a set of true or false conditions. The drive candle is bearish. The signal candle's low swept below support. Its close reclaimed back above the drive's midpoint. The move was only partial, and the signal candle closed bullish. When that whole condition is satisfied, it reads the current ask price as the entry, sets the stop a little below the signal candle's low using the ATR multiplier, measures the risk, multiplies it by the reward-to-risk ratio for the target, and calls trade.buy. The second block is the mirror image, the bearish dark cloud cover. Here the drive candle is bullish. The signal candle's high swept above resistance. Its close fell back below the midpoint. The move was partial, and the candle closed bearish. The code then reads the bid price as the entry, places the stop just above the signal candle's high, measures the risk, projects the target with the same reward-to-risk multiple, and calls trade.sell. Both sides are symmetrical, clean, and fully rule-based, which is exactly what you want in an automated strategy. Let's bring this to life on the chart. We're looking at an illustrative heuristic sequence, and I've drawn two horizontal references, a recent support level in green and a recent resistance level in red. Watch how price interacts with each. We begin on the left. The first couple of candles are drifting gently lower, easing price down toward that green support line. Nothing to act on yet. The strategy is simply watching and measuring volatility with the ATR. Then comes the drive candle. This is a strong bearish candle with a meaningful body, pushing decisively down into support. On its own, this looks like sellers are firmly in control, and many traders would expect the level to break. But look at the very next candle, the signal candle. It opens lower and stabs below the green support line, taking out the recent low. This is the liquidity sweep. Price dips into the area where resting orders tend to sit, grabbing that liquidity. Here's the key, though. Instead of closing down there, the candle reverses within the same bar and closes back up, finishing above the midpoint of that drive candle's body, yet not quite erasing it completely. That partial reclaim, closing bullish after sweeping the low, is the piercing line pattern the strategy is built around. With every condition satisfied, the EA places its buy entry on the open of the following candle. You can see the buy entry marker right there. The protective stop is set just below the swept low, padded by the ATR, so if price genuinely breaks down, the loss is contained. The take profit is projected upward at 1.6 times that risk distance. Now we follow the move. The next candles begin to climb, one after another, as the rejection of the lows plays out. Price works its way higher, candle by candle, until it reaches the take profit target marker. That completes the long side of the example. Notice the logic. The market swept a level, failed to hold below it, and reversed, and the strategy aimed to study that snapback. Now the chart sets up the opposite scenario. Price keeps pressing higher and approaches the red resistance line near the top. A fresh, strong candle appears, this time a bullish drive candle, surging up into resistance. Again, on the surface it looks like buyers are breaking out. Watch the next candle, the bearish signal candle. It spikes above the red resistance line, poking to a fresh high and sweeping the liquidity resting above that level. But it can't hold the gain. Within the bar it rolls over and closes back below the midpoint of the bullish drive candle's body, while still staying above that candle's open. It closes bearish. That partial rejection at a swept high is the dark cloud cover pattern. The EA responds by placing its sell entry on the next candle's open, shown by the sell marker. The stop goes just above the swept high, again padded by the ATR, and the take profit is projected downward at the same reward-to-risk multiple of 1.6. From there, price rolls over. The following candles step lower, retracing the earlier advance, until price reaches the lower take profit target marker. That completes the short side of the example. So across this single chart, you've seen the full personality of piercing cloud reversal. On both sides, it waits for the market to overreach a level, sweep the liquidity beyond it, and then fail, closing back through the prior candle with a partial reclaim. The drive candle shows commitment, the signal candle shows that commitment being absorbed, and the support or resistance line gives the move context. Of course, not every sweep reverses. Sometimes price keeps going, the stop is reached, and a loss is taken. That's a normal part of any strategy, and risk is always present. And that brings us to the end of our breakdown of piercing cloud reversal. We covered the core idea of a two-candle reversal, the piercing line and dark cloud cover patterns, how the liquidity sweep of support and resistance defines each setup, how the ATR shapes the stop, and how the reward-to-risk target is calculated. We also read through the MetaTrader 5 code that brings it all together. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, leave a comment with the strategy you'd like me to analyze next, and subscribe so you don't miss future breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.